What's up, everybody? Rel here from E&J Capital. Rel, most importantly. Of course, giving you raw today. So, man, this week has been a very interesting week, at least I could say. My portfolio, if anybody has a 401k or invest in stocks, anything, you probably feel the same pain I did. Around 2-3 weeks, I'm down $6,000. Unfortunately, like I said in my last video, this is my own fault because I didn't decide to hedge quick enough when I should have. Everything was just moving way too high for my liking. So now I'm down. But with all this going around, the coronavirus and everything, it seems like it's getting serious. We got let me see what we just got updated on the travel ban where we're not allowed to go, and it is. They added Britain, Ireland, Europe. Well, that's just common sense, out of the country. But they're actually forced to stop in 13 airport locations before they can even get okay to go back and into the plane. So that's kind of scary in a way because we made it through so much stuff. So I'm not going to be like the rest of these people and just go crazy. That's stupid. But the point of this video I want to talk about is don't panic sell. You never want to panic sell. That's the worst thing you do. The little bear market we're going through right now is where most millionaires are made. You get the best stocks on sale. Like I was looking at this Norwegian cruise line. I was trading at $50 about 3 weeks ago. And now it's down to $10. Now, not necessarily every cutback on stock is always a good stock. You got to know the financials. You got to know the perspectives of the company. So if you don't understand it, don't even bother investing in it. Look for stocks you can understand. And like, for example, look at Apple. Apple was, what, $320, and now it's back to $260. That seems like a pretty good deal. And, oh, my God, anybody that heard about Bill Gates, he stepped down from Microsoft. That's crazy enough right there. Like, the world's ending. Bill Gates, but seriously, he's doing philanthropy, meaning he's basically donated his money to charity, and he's giving it away. Good for him. He had a long, good run. He was a don, But back to the bear market. Like I was saying, this is the perfect opportunity for you to invest in stocks that you usually can't afford because of the price. Some stock prices are way too high. Like, I would never buy Apple. I love Apple, but I would never buy it. I have it in my index fund. That's good enough for me. I used to own Apple, like at 150. If I wish I kept it, but I didn't. I own Microsoft too. I made a lot of rookie mistakes. So my point being is never selling a loss. Because I was talking to Evan too. When my portfolio got hit, your emotion starts to get involved with money, and then you start thinking like a rookie. I was talking to him about, like, what if I decide to sell my shares now and buy in cheaper? But it just makes no point. Like, I was acting like a little girl at that day. So I'm thinking, he's like, no, don't even bother. And he was right, because then I remember I'm a long-term investor. Like, this is known for long-term investors. You're going to hit some hiccups in the market. So I decided just to hold on to my shares. And the stupid thing is I dollar cost average. Like, so I don't really worry way too much about the price, because if it's cheap, I'm going to load up. And if it's expensive, I'm going to be a little cautious about it. Just buy little shares here and there. Same thing with AMD. I was buying AMD at 40, 45, 50. And then it stopped dropping. I picked up more shares, so my average cost base is around $41, which is not bad because it's up 43. So I think up around 2% on AMD in my portfolio. Another thing you should definitely read Intelligent Investor, because it talks about when the market is in the bear, or Tony Robbins' book, it's called Winter's Coming, meaning there's going to be a bear market, but there's also come springtime. So you want to do your research on companies now so you can prosper long term, because companies are on sale right now. Now, like I said, not every company is a good company for you to invest in, so you have to do your own research. But definitely have some stocks you are always watching that you always want to get and maybe buy on the dips. Like, for example, I'm a fan of CRISPR. I always like CRISPR. CRISPR is a bioediting company where they genetically modify diseases out of kids, adults. They actually had one, it's like last year, they took a disease out of a child and it was a success. So the price of the stock went up. Now this is crazy too, because I owned them when they was at like $15. I tell this to everybody, this is my biggest investment mistake. Owned them at 15, sold at 25, bought back in around 27, and it goes to 40. Sell again, then I buy back in at 50. It goes to 60, and I sell. I think that was one of my biggest profits I've made is with CRISPR. I love CRISPR. That's on my watch list right now because it did drop in price. I think it's trading around $32, which is good for me. My usually cutoff price for stocks is like around 40, 50. I'll say 40 to 60 range. That's my cutoff price. So another rule of thumb is what Warren Buffett says is when you see blood in the streets, that's the time to buy. And when people are getting greedy, that's the time to sell. But you know Warren Buffett is never selling any of his shares. If anything, he's picking up more shares, especially with the airlines. That's another thing. We're always going to need airlines. We're always going to need cruise lines. Like, we're going to need transportation, okay? So those will always go up. So if you're looking at maybe American Airlines, they're dropped down. I think they're trading at 15. I'm not sure. I could be confused with Delta Airlines or Southwest. Either of those are going to be good because, like I said, we need to travel. Okay, we're going to need to travel to places, see our family or wherever we have to go, maybe for business meetings or something like that. So my point is, don't get too scared when it comes to investing. Like, for a perfect example, I think, or it might have been Evan, he was talking about when people are so scared to invest because they think the market is going to crash. So I hope anybody didn't decide to finally start investing 2 weeks ago, because if you do, I feel your pain, trust me. I feel your pain. Now, another thing I want to talk about, I talked about it earlier, but hedging is very important. Like, I wish I did this months ago. Like, something in my gut told me, okay, Jarrell, you need to hedge against your whole portfolio. And I didn't do it. One, because the whole thing was crazy expensive. Some of the spreads were like 50 to 60, even I've seen $1 sometimes. And that's a big spread. So I wasn't too, I didn't do it. It was too expensive for me. And on top of that, this is another key thing, have liquid cash on site. Unfortunately, I don't, because I put basically all my money into the market, which was dumb on my part because I should have put little and little away for a time like this, because it is Christmas time for me. Looking at all these stocks that are good and drop down in prices maybe 25 to 30%. Amazing. So have liquid cash, hedge against your position. When I mean hedge, a couple of people ask me about what a hedging is. It's basically getting a put option. A put option is betting that the market, I shouldn't say bet, you're hoping the price of a stock goes down. Now, you could just do an individual stock, or you could do the triple Qs or the SPY. The SPY is basically 500, the S&P. That's basically what it is. And then I was talking to somebody else. I was asking what domestic stock is. Domestic stock is basically American stock. That's it. And like Warren Buffett said, it's a rule of his, never bet against America, because we always seem to win. So if you see stocks you like, get them. Now is the perfect time. We don't know how long this coronavirus is going to last. Like, listen, you know it's serious if they cancel the hockey, March Madness. That's a big thing down over here. The NBA, like, everything is canceled. So take caution. And, I wish I had this book. This whole virus thing reminds me of the book I read. It's Lights Out. It wasn't really about the virus, but it was talking about, like, electric shortage, our power grid, because we only have 3 power grids in the U.S. So if one of them got attacked, how they're going to send some people's back in the 40s in some states. America, if you, wow. You know what I'm saying? But the world is crazy, man. At the end of the day, the world is crazy. But like I said, hedge, get option strategies. Definitely listen. This is the time to start getting puts. It's easy money. We're kind of in a bear market right now. We basically are. The S&P dropped 20% this week. It's crazy. And the Dow Jones dropped 2,300 points. That's the most since we've seen on Black Monday in 1987. This is the worst drop anybody's seen since then. Long-term investors like me, hold, and hold. Maybe you can pass down to your kids or your grandkids or whoever you want to do it for, or whatever your goals are. And if you just want to be a prophet, get some push strategies, keep doing it, take your profit, and just keep repeating over and over. All right, so make sure you guys like and subscribe to our video. Much love, guys. Protect your portfolio.